Bitcoin ETF trading explodes in the market. This is the subject of the video here at Bitcoin Now. After 4 consecutive days of net outflows from Bitcoin exchange-traded funds, the market experienced a significant recovery on Thursday, December 26, led by the Fidelity-Wise Origin Bitcoin Fund and the ARK 21 Shares Bitcoin ETF. Bitcoin ETFs recorded a total net inflow of more than $475 million. This change marked a significant turnaround in market sentiment towards the digital asset. According to the sosovalue.com platform, the two main highlights of the day were the Fidelity Fund, which raised $245 million, and the ARK Fund, which raised $187 million. These figures easily outpaced the more modest net inflows of other funds, such as BlackRock's iShares Bitcoin Trust, which registered $56.5 million, and the Grayscale Bitcoin Mini Trust, which raised $7.2 million. Mixed performances in other funds. While some funds celebrated significant positive results, others faced negative flows. The Grayscale Bitcoin Trust, the largest Bitcoin fund in operation, registered net outflows of $24.2 million. The Bitwise Bitcoin ETF suffered losses of $8.3 million. 5 other funds remained static, with no significant inflows or outflows during the period. These figures highlight a partial recovery in the Bitcoin ETF market, but also reflect the different strategies and levels of confidence among the managers and investors involved. Growing institutional interest in Bitcoin. The jump in net inflows seen on Thursday reflects the growing institutional interest in Bitcoin. In an interview with Bloomberg, ARK Invest CEO Cathie Wood attributed the increase in net inflows to the evolving regulatory environment in the United States. Now that we are moving toward more regulatory approvals, we are seeing more institutional investors turning their attention to this new asset class. Bitcoin is the first of its kind, and we believe it represents the biggest opportunity of all, said Cathie Wood. This bullish view is supported by the growing adoption of Bitcoin ETFs as diversification tools in the portfolios of individual and institutional investors, as well as the asset's growth potential in the global financial market. So why are institutions taking an interest in Bitcoin? Institutions are increasingly interested in Bitcoin because it has evolved from a technological novelty to an asset that offers real investment and portfolio diversification opportunities. Initially, Bitcoin was seen as a risky asset, associated mainly with speculators or technology enthusiasts. But over time, it has begun to demonstrate qualities that have made it attractive to institutional investors. Program scarcity, transparency in its operations, and independence from traditional financial systems. Think about it. Institutions are looking for assets that protect the value of their portfolios in unpredictable economic scenarios. Bitcoin, with its fixed limit of 21 million units, is essentially a hedge against inflation, especially in a world where governments continue to print money to deal with economic crises. This characteristic makes it comparable to gold, but with the advantage of being digital, portable, and more accessible in global transactions. Another important factor is that the Bitcoin market is maturing. Today, we have ETFs, regulated custodians, and more legal clarity in many countries, which offers greater security for large investors. This eliminates some initial barriers that keep institutions away. Companies like Fidelity and BlackRock are creating financial products around Bitcoin precisely because there is demand from their clients, who now see the cryptocurrency not as a passing fad, but as a legitimate long-term investment opportunity. What's more, institutions generally like assets that have great potential for appreciation in the long term. With Bitcoin, they are betting not only on the asset itself, but on blockchain technology as the basis of a new financial system. This attracts companies that want to be at the forefront of innovation, seizing the chance to get in early on an asset class that could define how money and value circulate globally. Ultimately, what's happening is a confluence of factors. The need for diversification, the search for protection against inflation, the maturation of the market, and a strategic vision that Bitcoin represents the future. All of this is convincing institutions to enter this market, even if it means facing a learning curve and a bit of initial risk. Before I go any further, I need to pay my bills, so I'll post a quick announcement. Have you ever seen a clock that's so much more than a timekeeper? Meet the Nixie Tube clock, a perfect fusion of past and future. Made with vintage 1970s technology, each Nixie Tube displays numbers in a mesmerizing spectacle of lights and retro design. It's more than just a clock. It's art, a conversation starter, and a piece of history. If you love exclusivity, this clock is for you. A rare item, designed for those who want to stand out and transform any space into something truly unique. It's the perfect gift for tech enthusiasts, interior design lovers, or anyone who deserves something unforgettable. But be careful. This clock is a limited edition and will only be available for a limited time. Don't miss out on your chance to bring this unique piece into your home. Turn time into style. Click the link in the description and get your Nixie Tube clock today. Now, let's get back to the video. Market firsts. The first Bitcoin-linked bond fund. On the same Thursday, Strive Asset Management, co-founded by former presidential candidate Vivek Ramaswamy, announced a market first by filing to launch the first Bitcoin-linked bond exchange-traded fund. The move aims to serve both individual and institutional investors, promoting greater integration of the Bitcoin-based economy into traditional financial markets. We believe that both private citizens and institutional investors should consider a significant allocation to the Bitcoin economy in their portfolios, the company said in a post on the social network X, formerly known as Twitter. This move underscores the market's momentum, with more companies joining the race to offer Bitcoin-related financial products, reinforcing its legitimacy as an emerging asset class. And for those who don't know, a bond fund is like a basket of assets that you can easily buy and sell, just like a stock. Think of it this way. Instead of investing directly in something like Bitcoin or individual stocks, you buy a small piece of a fund that already has those assets inside it. It's like going to a market and, instead of choosing each fruit separately, you buy a basket that already comes with what you want. The cool thing about ETFs is that they're very practical. You can trade them on the stock exchange, just like you would with stocks, but the difference is that they're already diversified. For example, in the case of a Bitcoin ETF, it will reflect the price of Bitcoin without you having to buy it directly. This is great because you don't have to deal with the complicated part of storing Bitcoin or worrying about passwords and digital wallets. In addition, it has the advantage of being transparent and accessible. You know exactly what you're investing in, and the value of the ETF closely follows the asset it represents. This makes ETFs very popular for those who want to invest in a simple way, without having to understand all the technical details or operate directly in the asset market. So, that's it. The ETF is like a shortcut. It gives you easy access to markets that might be complicated or risky to enter on your own, but in a simpler and more regulated way. A market that is steadily expanding. The numbers reflect the impressive growth of the Bitcoin exchange-traded fund industry. As of December 26th, the total assets under management of all Bitcoin ETFs in the market reached $18 billion, $240 million. This figure symbolizes not only the growing confidence in Bitcoin as a financial asset, but also its consolidation as a viable alternative within global markets. This growth marks a significant step forward for an asset class that, until just a few years ago, faced resistance from both the public and financial regulators. The significance of Thursday's U-turn. The influx of nearly $500 million on Thursday represents much more than an isolated market movement. It reflects a shift in sentiment among investors and suggests a renewed appetite for exposure to Bitcoin, especially at a time when regulations are becoming clearer and friendlier. Bitcoin as a pillar of the financial future. With the growing popularity of Bitcoin ETFs, the market is undergoing a transformation. Growth led by funds like the Fidelity Wise Origin Bitcoin Fund and the ARK21 Shares Bitcoin ETF, combined with innovations like Strive Asset Management's Bitcoin-linked bond ETF, shows that Bitcoin is becoming an essential component of modern financial portfolios. With assets under management with the stock surpassing $18 billion and more companies entering the market, Thursday's strong performance is a milestone in Bitcoin's upward trajectory. It solidifies its position as the pioneer of a new asset class in the global financial landscape and reinforces its role as one of the greatest investment opportunities of the 21st century. And if you want to watch more videos about Bitcoin, I'll leave one right here. I have to go myself.